All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for June 5th, 2023, Monday. Shout out to Marius. Good to see you, buddy. All right, we'll start as usual with the swing portfolio. This is Alcoa on 30-minute charts. This is the 5-day look-back period, the 1-day. The black box shows the 30-day low. Then this is the daily high and low right there. So Friday we initiated a COTA 2 gap and go. Alcoa closed pretty well, but then started dropping like a rock, and we got out of it basically with a no lose plus dinner for 2. I didn't get the continuation. I didn't get the morning hook, and I didn't get the fail. So I was just happy to get out of that one with a little coin. AI, on the other hand, worked pretty well. This was the SSC that we took at the end of that long 3-day slide. Held my nose, bought it at the close on Friday, and it rewarded with a 2R win. And holding nicely right at the resistance level. So if we get any kind of movement tomorrow, I'll be adding a second position there, because then it's going to close this gap pretty fast, and then the next resistance level is not till you get to 40. So there's another good chunk available to the upside. On the other hand, if this starts selling off, I'm going to try to get out of it somewhere around the PSAR. I'd be willing to be short that south of the RL10 in the usual way. Caterpillar's really nice move from last week. You'll recall we had an SSC, we got a favorable gap, and then we added 4 positions intraday really fast and then exited all 4. And that's the turbo trade. And those 4 winners really paid off and allowed me to hold this one, the swing trade, overnight. And that just gapped down and started selling off. So we just closed that swing trade there for something like probably 8, 9, 10, 11, about 12R on that swing trade on this much risk. It's stabilized pretty nicely here. I could see this becoming a COTA 2 entry with a breakout above, say, 224. I could also see somebody aggressively shorting that at 222. But after that kind of move, I'm not sure I want to be on the short side of that one. But, place your bets. This was Cliff, and this was a roller coaster. So last week we had that run up, sold off, exited. It sold off like a morning hook and found support. So we got long, put a second position on. Today had to cash that when it didn't continue, but instead started selling off. So that was like a 2-position gain. Then it found support, so we tried it. And because we're in about the 3rd leg, I just took the 1R and said no overnight risk, and just happy to get out of that. This is sort of like the point of diminishing returns. When you're buying on the favorable end of the curve and all that move is ahead of you, then that's fine. But once this starts petering out, then it made sense to me to capture that 1R. Chevron. Really nice 2-day trade on the COTA 2. I mean, just as nice as you could want. So a nice 3-position run up in cash. Orderly sell off. COTA 2 support. Crossed the dragon, bought it. It closed well. Today it gapped and then really couldn't make anything new and started to sell off. So was happy to just collect for about 5R on that one. I like that one a lot. Dish got short. So that was the explosive run up, and we got a little taste of that on Friday. It sold off the rest of the day Friday to here, and today it did nothing but just roll over. And when it broke through the dragon, I took that as a collapsing dragon, and so I'm holding that one overnight. With I'd like to see it come down and test the gap low, and then if that fails, I'll add a second position short, because then it's going to cover this gap pretty fast and then get all the way down to 6.25. So tentative, and I like what kept me in that trade was that it had just turned to winter. So I like that. Devon Energy, no trade. Electronic Arts, we closed the COTA 2 for a fraction. Ethereum, there was a trade on the short side on the collapse. You can't trade ETHE long, so we just had to watch that one. EWW initiated COTA 2 long, holding +2. Brazil, still holding a really nice entry from last week on the SSC. And it closed well. The gap held. Today it's just kind of grinding. I wouldn't be offended if you just got out of that and decided to cash. Let's see, 5, 6, 7, 8, 9. That's a 9R trade in 3 days. Nothing wrong with cashing that one. But the fact that it didn't fail made me want to try one more. Tomorrow I will announce my regret of that decision. So I've already felt the 1R loss, but it'll be more. So Friday there was a scratch on Intel. Today there was a gap down and it was below the dragon, and this was a lower high. So I treat that as a COTA 2 to the downside. It was getting ready to roll into winter, so we took that standard risk, closed poorly, and that's holding +3 to the downside. And then the next nearest resistance is right here where it is. So if that breaks, then the resistance is this, about 28.50, and that would be a place to add a second or third position. I could see if it broke here to add a second one and then a third one here if you were being aggressive. And there's nothing wrong with being aggressive because it's already in the winter and it's below the Red River. So there's still plenty of disappointment yet to be experienced, especially everybody that has enjoyed that move and who just can't believe it in their heart that this thing is losing money. So those people have to be persuaded that it's terrible. This is IP, International Paper, no trade. That has potential tomorrow for a collapsing dragon. The fact that it could not make a new high today, that this high was lower than this one, sets up this as a collapsing dragon. So the first sign of weakness, you should be short with the idea that it's going to come down to 29 because this gap will close pretty quick. So that's the first leg, is to about 29.75. If you were aggressive, you could put a second position on there if it started to fail. It takes a price above 30.75 to be on the long side. So this is really your that's really your, today is the yellow zone, and you want to be short as soon as it gets into the red. IYR, we closed the COTA 2 for about a 1R. KRE, we cashed the 2 position SSC as it broke through the dragon. I didn't take the short. I missed the short. That is also setting up for a potential collapsing dragon here to the downside. And that's reinforced by the fact that it had a run up and it couldn't make a new high, and the dragon is rolled over and the RL30 is rolled over. So that's all about an owl entry short side. and a collapsing dragon here. So that one's an automatic short tomorrow if that breaks. McDonald's, really the same trade. Exiting the 2-position long, and then it made a lower high and is rolling over. So if that rejects this winter, if that rejects the dragon and the PSAR and starts breaking below 288, that's an instant short, because that would mean that this support level fails, and then your next support level is not till 285, and you can make that a nice trade. Merck, same trade. Cash the 1 position long on the gift. There was a potential short in here, but I wanted to give it another day. Let's just see what tomorrow brings. No hurry. Microsoft cashed the this was a late in the day give back. This made me feel like a lot of the optimistic people in Microsoft were content, like me, to cash this 1, 2, 3, 4, 5, 7, 8, 9, a 10-hour trade from here in 3 days. And before it becomes a panic sell, it just felt like that was the place to get out. It's easy to get back in. It's easy to believe in the strength of this move, especially when the givebacks have been so small. But let's see how far it goes and see if we can't get a better price. But that looked like a nice orderly way to make bank. So if I can get out of a trade like that I love, think how much easier it is to get out of a trade that you genuinely hate. So just some thoughts on that, of being willing to get out because you know how to get back in. So this was during the day, continued weakness. It was below all of the previous resistance levels, or support levels, I should say. And it's below the 0 line, so it's in the winter. It didn't collapse really until the last hour, and then it gave us about a 0.5 gain to the downside. But I feel like that's just beginning to suffer. NVIDIA was a scratch exit. We had a 2-day trade that was in the money most of the day, but then just started failing right at the open, so just get out. Clean Energy got out of a 2-position SSC. Rivian tried the short side trade, and I was really optimistic about this thing suffering because it immediately paid off. But then this one, just as I was getting ready to exit, it failed a little bit. Then just as I was getting ready to exit, it failed a little bit. And then I said, what am I doing? Why am I believing in that? Just get out of it. If it doesn't fail and fail big, don't hold that pig overnight. Just get out of it and be glad you didn't lose any money, dummy. That was my positive, affirmative self-talk. Yeah. What are you going to do? So, nice upward move in treasuries. Completely missed the collapsing dragon and caught a 2. That's the template for the trade that we wanted on some of those earlier ones, where you have a lower high and then you get the collapsing dragon entry. That was set up beautifully on Friday. Missed it. Today it just continued to drift down. So I think anything below about 101.80 is shortable, with the idea that it could easily fail all the way back to 100. Conversely, if this holds, I could be long about 102.25, because then that sets up this trade. And you have to have about that much risk because you're going to get about that much reward. So 102.25 on the upside, 101.80 on the downside. That's about a 45-cent risk box right there. Treasuries. Tesla, I got out of the 3-day 2-position trade. It's supposed to go. It didn't. The rest of the market was showing weakness, so we cashed about 1, 2, 3, 4, 5, 6. It's about 7 hour. U.S. Steel. This was an intraday trade that we got out of on Friday, and then today it gapped down to here and sold off, and that was like a 1, 2, 3 entry on the long side with a standard risk. And it got through the dragon, but then it just kind of petered out and couldn't get through the PSAR. So that actually sets up that lower high. And that means I don't want to be holding this overnight because I want to be short if it gets below 21.75. So I was just happy to take the 1R, that little 1R gain, and have no overnight risk, and then be ready to break in either direction tomorrow. So that's the swing portfolio. All systems go. Let's see. We want a sniper trade of the day. So this is Cliff, our old buddy, steel company. This is 3 minutes. And the steels were the big movers last Friday, so was expecting big follow-throughs today in the metals. And here was the OR3. And the next bar opens, so we get long there in the usual way, with a standard risk box of the yellow box, and that instantly failed. So I got out at the belly of the RL10 like I'm supposed to, and then that becomes a collapsing dragon to the downside, and then I suffer about minus 0.5. Check or hold. That's just automatic. That's just get in and start trading. That one pays off right away and lets me collect about 1.5, because there's your risk. There's about 1, and that's about half. So this half pays for that half, so we're about net plus 1. And then this gives us a reversal, and then a PSAR flip, and we just set up the standard risk box like that, and we're long this way. Check or hold. Grinding, grinding, grinding. Second position when it clears the previous peak. Twice. And that feels like a Kata 2 emerging dragon combo. And, we're holding about plus 2R. So, there's a bunch of reasons to add the second position there. You can feel it grinding, can't you? And it stops right there. So that one just rolls into a very orderly 1, 2, 3. 3R on the first one, and about 1R on the second one. So that's plus 4. We were net plus 1 from here. So now we're about net plus 5. Kata 2 re-entry scratch. And that was enough for the day. Quick look at the template for tomorrow. So this is sorted by the percent change today. And there's Cliff was a big winner today. And Tesla was the overall winner. This is the cut line for made money, started losing money. The Qs were the only index that made money. Emerging markets were close. U.S. Steel and Alcoa is worse. Let me find that one. So below the cut line, you got emerging market, U.S. steel. Alcoa was the big loser today in the metals. The semis weren't any better. NVIDIA was the best one, but he lost 0.4. Texas Instruments lost 2.8, and Intel lost 4.6. So a bad day for semis. Semis bad. Metals bad. U.S. Steel off 0.14, Alcoa off 3.3. Only Cliff had any juice. Diamonds and the Russell both bad, worse than the S&P. Devon Energy was down 0.3, so big hit in the Bitcoin, Ethereum, and Coinbase cluster. But VXX remains surprisingly weak. That one's a surprise. So, tomorrow is a crapshoot. Could be anything. It almost feels like it's not too soon to start thinking about this being all tactical trading until the 24 election. I hate to say that. I hate to think that we're going to have 18 months of grinding with little political shenanigans causing us to suffer. You think about the only positive thing would be that you have a do-nothing Congress, which should be favorable because they can't pass any legislation. And we're past the debt ceiling shenanigans. All we really got is Biden's age, his VP candidate, the Ukraine war, and the Republicans lining up to humiliate themselves with Trump. That's such a circus. And I hate that we have to buy a ticket for it. Yeah, I mean, to me, the next 18 months is pure tactical trading, and that's why my emphasis on the 30-minute swing trade, I feel, is the correct one, because we're getting the best of 2 and 3 day moves. If you think about what we just showed, the 2 to 3 day moves that are strongly directional, they start petering out after that. And if you can optimize kind of that holding period on 30-minute charts, 40 bars, 30 minutes each, that gives you about 3 trading days. That just feels like there's it's properly positioned between the anxiety of intraday pure and the longer term swings, which are not following through. So that's my position until evidence proves otherwise for the next 18 months. Let's take a look at the traders. Damien continuing to work hard with SPY on 1 minute chart. And gets a morning hook and a 1, 2, 3 and price leaving the dragon with his standard risk box. Has a nice run up, starts selling off, so just take one. I mean, why not? And then when this long slide is kind of over and he gets the PSAR flip, sort of a natural entry here. That's the first time in the last 10 bars that it broke below that. So why not? Because that's your standard risk to the top of the dragon and get paid 1R. Now this one is maybe a little slow. You could have thought about a 1, 2, 3 entry right here because there's a 1, 2, 3. Or you might have tried the PSAR flip or but you get the crossing of the dragon and then that slides right away. So I love the exit. That's exactly correct. And that gives you 1.5 for the day. And thank you very much. Hamad, there's your OR3, but you know that. And you know that that's a collapsing dragon, Kata 2 continuation. with a natural exit right here when it fails to fail further. But that makes this a perfect entry. My spider sense is that you notice that, and rather than just beating yourself up, you're able to see that, hey, I got this tremendous move that's well outside the Red River that has turned to spring and now entering the Red River, and, you know, why not? And there's your move. That's just a move back to summer. And nice cash. I don't mind the short. I like the quick exit and then the quick reverse long. Now, it didn't follow through, but that's correct. That quick reversal paid for the false start, if you will. Yeah, I can see that that's a possible short, but at the same time, I would just say, look, it was getting into sideways quiet channel anyway. And I actually like this entry. I love that entry. And that's a great exit. So that's everything you want if you just start taking that OR3. They all look the same, leaving the river, I should say. This is Brazil. It can get a little choppy. That's not a bad entry. I like the quick exit. I like the reversal never. I love the quick exit. And then after two failures in a row, I'd like to see you get short right at the PSAR here instead of here. And then be vicious on taking that exit earlier, like right here. It turns out to be the same exit, but I don't even want to give it that extra piece. Like, if this had kept going, that would have been painful. Now, it didn't. It came here and allowed you to get out there. But I'd rather see you lock in that nice move earlier and be done with it. Then you would be in a position, I think, to enjoy the entry here rather than here and rather than there. Because you let an entire R disappear before you got in and then at a micro loss. And I like this trade, but when that rolls over right away, just scratch it. Because that feels actually like a fake one go-to until proven otherwise, right? So just a few learning points on that one. This one is, who is this? What is that symbol? Tesla, okay. But that's a really tight stop. I mean, that's like $1. That feels too tight. I don't like shorting Tesla these days, but there was actually a collapsing dragon here. But I think I'd have been I think I would have tried to get this morning hook like here rather than here. Then that makes this a scratch. I like that short. I love the exit. I'd get it short again here, as you note, because it's already rolling over. And it did not follow through at all on the upside. All of that didn't happen, so that now makes it feel like the downward move is there. Now, that would have paid off with a micro trade. There just wasn't much room. I don't think I like those trades at all because this is so sideways for so long. It feels like you're forcing that, and I don't think we want to. I don't think we need to take that loss. Find the movers. Apple. The lack of movement in Apple is surprising because they're actually making some product announcements. But what I really like is that you stayed out of this entire chop. And by this time, that's worth a shot. But if it doesn't work, this is like a fake one go to, and then you get that move. So be bi-directional on that one. This is Brian. Yeah, I don't know what that is either. But I like it. I mean, I treat that as like. Let me see if I can justify that trade. I cannot. So if we go to the 2-bar rule, now notice that the RL10 at this point is still right here. So the RL10 is on the wrong side of the dragon. So if you want to play the price breakout, fear of missing out, then you have to go back 1, 2 PSAR dots, and then your actual fear of missing out entry would be here, because you want to be 2 dots back. And then if this price had taken off through there, then you have enough pull away from the dragon to justify getting long. But it didn't. What it did was roll over right away. And then now notice that the RL10 only just barely hit the PSAR and then went nowhere. And by this time, if you take that long, which you can, you're out here or here. And that's less of a pay. It's really, the thing is, you want to work on fine-tuning that fear of missing out entry. I like that short, and you still manage to get a little bit of paid. That's a good reversal, and that pays off, and that's trust in the PSAR. Might have been able to take that one in hindsight. Yeah, I agree. It gaps up and then just does this. And yeah, not sure what the pattern is. This one, so this exited for an R, and then fear of missing out got in here, and then we let it go all the way to here, I think, or maybe here. Whereas we should be short right about here. Even if we're long here, we got to be short there, and then probably here. That's still pretty good, but now we can get this one here or here. Yeah, so this one, if we follow the rules of the PSAR dot cross, right? This is the PSAR dot that the RL10 exits or crosses is here, so getting your entry right about here is still pretty good. In this bar, your 2 dots back is this one, and that makes your entry here. Rather than here. But either one of those is happy, because either one of those pays off, and that's why that feels late. But good self-coaching. This is a pretty good COTA 2 and a great exit and a great reversal, crushing it for 1.7. That's how you do that in the routine way. This is the advantage of waiting for the morning shenanigans to be over and let it shake out and then start taking the trades. All right, so let's see. Quick look at the market health checks. This is the 150, 150-day look back. And it feels like we've cleared, that resistance. So this still all feels pretty good. And we're pushing 430 now. Feels like we've made it through 420. This whole move from down here was all an effort to get back to 420, which was this previous resistance. And now it feels like we're okay. So there's reasons to be optimistic. Volatility is declining. It's just getting ready to leave the Red River. So this is still pretty good news. Today's give back was minuscule. Orderly recovery today. Volatility has increased just enough to go from bull quiet to bull normal, but still very strong. We're now into risk on because we just nudged above the zero line, or got to the zero line. Price relative to the 200-day is green bullish. ADX still steadily improving at 21.4, and that's to the long side. So this is what a grinding bull that's finding traction feels like. DIA, Cisco, Microsoft, IBM. That's old school tech. That's the XLKs of the world. And metals and mining, our steel companies are suffering. Intel is especially suffering. So that's still pretty good. Dow Tactical, the only big plus was Tesla today on an upside breakout. That's why I don't like shorting him. Even though it's not working on the long side, I really don't want to short that one. Brazil, Latin America. Marijuana starting to make that first breakdown. That's the first sign of breakdown, and that's why I was willing to hold that in the overnight trade. Standard work in the auto framer and the squeezes, only a few squeezes today. Godzilla's a handful here in the S&P 500. AAP and DG are both enraged Godzillas, and that doesn't get much worse than that. Those things, if they break down, you want them downside. And the VIX is at an amazingly horrible sell-off. That emphasizes the upside. I mean, this market is slowly gaining traction. It did not fail today. Your one-day movers. Now there's some, Hewlett-Packard, Apple, 3M, Intel, Juniper. There's some movers in there in Techland. The most volatiles, there they are. Hewlett-Packard is a double volatility. An equal mix between summer, winter, and spring. The NDX, tales of the haves and the have-nots. So the big winners here: Walmart, Tesla, PayPal, Cliff. Losers, all the cryptos plus Nike. Intel especially is bucking the trend of strength in tech. So there's something fundamentally wrong over there. Brazil, Latin America, Mexico. That's telling you that it's non-U.S. opportunistic trading for the coyote. That's everything we got for today. Let's get this posted and get ready for tomorrow. Take good care, fellas.